Investing in stocks involves more than just buying low and selling high. To make informed investment decisions, it's important to understand the financial health and performance of the companies you're interested in. This is where fundamental analysis comes in. Let's break down this topic for beginners. What is fundamental analysis? Fundamental analysis is a method of evaluating a company's intrinsic value by examining related economic and financial factors. These factors can include the company's financial statements, industry trends, economic indicators, and other qualitative and quantitative details. The goal is to determine whether a company's current share price reflects its true value and to identify investment opportunities. Understanding financial statements. Fundamental analysis relies heavily on a company's financial statements, which include the income statement, balance sheet, and cash flow statement. These documents provide a wealth of information about a company's financial health and performance. The income statement shows a company's revenues, costs, and profits over a certain period. It can help you understand how profitable the company is and how efficiently it operates. The balance sheet provides a snapshot of a company's assets, liabilities, and shareholders' equity at a specific point in time. It can give you a sense of the company's financial stability and its ability to meet its obligations. The cash flow statement shows how much cash the company generates and where it goes. It can help you see whether the company is generating enough cash to fund its operations and invest in its growth. Key financial ratios. Fundamental analysts often use financial ratios to compare a company's performance to its competitors or its own historical performance. Some of the most important ratios include earnings per share (EPS). This measures how much profit a company makes for each share of its stock. A higher EPS often means the company is more profitable. Price to earnings P/E ratio. This compares a company's share price to its earnings per share. A high P/E ratio could mean the stock is overpriced, while a low P/E ratio could indicate it's undervalued. Debt to equity ratio. This compares a company's total debt to its shareholders' equity. A high debt-to-equity ratio might indicate that a company has taken on a lot of debt, which could be risky. Qualitative factors. While financial statements and ratios are important, they don't tell the whole story. Fundamental analysis also involves looking at qualitative factors, such as the quality of the company's management team, its competitive position, and its business model. These factors can have a big impact on a company's future performance. Economic and industry trends. Fundamental analysis also considers broader economic and industry trends. For example, a strong economy might be good for most companies, but it could hurt certain sectors, like utilities or consumer staples, which tend to do better when the economy is weak. Similarly, trends within an industry can affect a company's performance. For example, a technological breakthrough could benefit tech companies but hurt traditional industries. Making investment decisions. The goal of fundamental analysis is to determine a company's intrinsic value and compare it to its current market price. If the intrinsic value is higher than the market price, the stock might be undervalued and could be a good investment. If the intrinsic value is lower than the market price, the stock might be overvalued and could be a risky investment. It's important to remember that fundamental analysis is just one tool investors use to make decisions. Other factors like your financial goals, risk tolerance, and investment time horizon should also play a role. Furthermore, while fundamental analysis can provide valuable insights, it's not a guarantee of future performance. Fundamental analysis can be complex, but it's a crucial skill for any investor. By understanding a company's financial health and performance, you can make more informed investment decisions and potentially achieve better returns. Whether you're investing in individual stocks or mutual funds, fundamental analysis can help you evaluate your options and build a strong portfolio.